Hi everyone, this is Rob Denton over at Great Mortgage. This is the first in a series of 6 instructional videos that I'm putting out that all have to do with credit, what your credit means to you, how to use your credit. We're going to do a whole big gigantic 6-week set, like I said, just about credit scores. We're going to talk about how to increase your credit. We're going to talk about common misconceptions that I deal with on a daily basis as far as what people believe is true about their credit and what is actually, applicable in the real world. So this first week, what I want to talk about is your credit score, what it means, how it's calculated, and how it affects your mortgage loan. In my profession, is what I deal with, but I mean this could affect how you deal with your home loan, how you deal with student loans. I mean, your credit score follows you everywhere, in case you didn't know. So, like I said, this first week we're going to talk about your score. So, I wanted to break down for everybody how exactly your score is calculated. A lot of people don't realize what really goes into coming up with that FICO score, is what you hear all the time. Quick little background. How we do it in my business, and I think how a lot of businesses do it, is we pull all three what's called credit bureaus: TransUnion, Equifax, and Experian. Now, what we do is we take the middle of those 3 scores, and that's what we use for your qualifying credit score. Some other places that you go to get credit, maybe like your auto loans or your student loans, they might just pull a TransUnion, they might just pull Equifax, they might go off of one or the other. Just to give you a little background on how that works. Now, the important part about this video is understanding how your score is calculated. Now, the first part and the biggest part that goes into calculating your score is your payment history. That makes up 35% of what goes into that credit score, which basically means, are you paying your bills on time? Kind of makes sense, right? Right below that, 30% of what makes up your credit score is how much you owe, compared to how much you're allowed. Now, pardon the shaky video a little bit. I'm holding my phone here, but what that basically means is if you have a $1,000 credit card and you owe $989 on it, you're overextended. A bank, a mortgage company, an auto lender, they're all going to look at that and they're really going to scratch their head and think, do we want to give this person more money if they can't handle what they have already? What I like to tell clients is try to keep it around 35% of what's available to you. So if you have a $1,000 credit card out there with a $1,000 limit, try not to go over $350. Definitely don't try to go over half, but you really want to keep it probably between 15 and 35% is your real sweet spot, if you will. So, and then number 3 on the list of what's going to make up that credit score is, and what 15% of it is the length of your credit history, which means that if you've had a bunch of revolving accounts for 5, 10, 15 years, people, these creditors, they know that you're responsible, that you could pay for these for all these liabilities consistently. That's the big thing that they really look at, consistent. Have you paid your bills on time for a long time? Kind of makes sense. Number 4 on the list, 10% of what goes into the score is your types of credit. So what that basically means is, did you go out and get a car loan? Did you get a furniture loan? Did you get a student loan? Did you get a unsecured personal loan from a bank? All this stuff. If you only have all furniture loans on your credit report, that's going to look a little funny. And if you only have 5 auto loans on your credit report, that's also going to look kind of strange. So you want to have a good mix. You want to have a solid mix of different stuff on there. And then 10% of what goes into your credit is new credit, or what we like to call in the industry credit pulls. This is a common misconception among a lot of people, and I can't tell you how many times I've had clients come to me scared to death and I'm going to pull their credit report and their score is going to plummet. It really doesn't. It makes up 10% of your score. So the idea behind it, so we're going to go over this in much more detail in another video, but if you're shopping for a mortgage or shopping for an auto loan, you're allowed to go to a couple different companies and have your credit pulled because you're shopping for it. Creditors understand that. They know that you're not going to go to the first place and pull the trigger on whatever's available to you. They know that you're going to check out a few different spots. So it's not going to hurt you if you have, ABC Bank pull your credit for a mortgage loan and then have me pull your credit 2 weeks later. It's not going to hurt your score. But I just wanted to give everybody kind of a brief overview as far as what goes into that credit score, because everybody always asks me, well, why isn't my score higher? I paid this off. Why isn't my score better? This doesn't make any sense to me. This is going to, like I said, this is going to be week number 1 in a series of 6. We're going to cover a number of different topics. Hopefully by the end of this, everybody will have at least most of their answers, or most of their questions answered, I'm sorry. It looks to me like we're at about 5 minutes and 12 seconds right now on this video. I was planning for this to be 2 minutes, so I apologize if I'm long-winded. A lot of the people that know me will definitely accuse me of doing that, especially some of the more recent ones that I've worked with. But keep this in mind as far as what goes into your credit score. Also, I want you guys to remember your credit score ranges from 300 to 850 roundabout, depending on the bureau. So if we like to say in the industry, if you're over a 720 credit score, you quote unquote walk on water. That's a great credit score. It's not, don't be concerned if it's not, much higher than that, because you're probably in the top 5% of the country. Average is I'd say about 640 to about 680, which is perfectly okay. You can definitely qualify for a loan with that credit score. And below probably a 600, or actually probably below a 620 is where we would start falling under different underwriting guidelines when it comes to getting you approved for a mortgage loan. So just kind of keep all that kind of stuff in mind. If anybody out there that sees this has any questions, feel free to comment in the comment section. Obviously, dealing with credit, there's a lot of sensitive information, a lot of sensitive ideas and questions that may pop up. Feel free to instant message me, anybody who wants to do that out here on Facebook, or always feel free to give me a call at 708-785-1308. And you can email me if you want directly at robdenton@greatmortgagecompany.com. Again, that's Rob Denton, Denton, at greatmortgagecompany.com. Stay tuned for our next video. Tuesday, we're going to do a video on collections and judgments, how we handle them in the home buying process. Make sure you check that out, because there is a lot of stuff there to learn. A lot of things that might make you scratch your head and really wonder if it really makes sense, but we're going to go through it all, and trust me, I'm going to lead you to the promised land. Just stick with me. So have a wonderful Tuesday, everybody, and like I said, feel free to reach out with any questions, comments, concerns, critiques. I'm more than open to all of them. So have a wonderful week, everybody, and we'll see you all next time. Bye-bye.